Right now, Enveric Biosciences is trading at exactly $11.86 per share, showing an absolutely staggering intraday gain of 100.34%, or a raw price increase of $5.94 from the previous close. If you are looking at your screen wondering if this data is a glitch, it is not. The market is witnessing one of those rare, violent repricing events that only happens when a perfect storm of structural scarcity and fundamental news collides intraday. We are seeing volume pour into this ticker at a rate that completely overwhelms the order book, creating a liquidity vacuum that sends the price vertical. Most people seeing a stock double in a single session immediately assume it is a pump that will fade by lunch, a classic buy the rumor, sell the news trap. The expectation here is that this is just another fleeting biotech spike destined to retrace, but the reality is significantly more complex and arguably more bullish in the short term. This is not just a standard momentum trade, it is a supply-side shock. Following the 1-for-12 reverse stock split that Enveric executed back in late October 2025, the actual tradable float, the number of shares available for public trading, has been compressed to a microscopic level, estimated around roughly 500,000 shares. When you combine a float that tight with the catalyst dropped this morning regarding the EVM301 Series patent allowance, you create a mechanical squeeze where short sellers literally cannot find the shares they need to cover their positions. We are not just watching a stock go up, we are watching a mathematical imbalance resolve itself in real time. If you are trading this on a mobile interface like the Robinhood app or utilizing SoFi Invest for your daily plays, you might be seeing halts or extreme spread variances. That is the nature of a low float breakout. Let's strip away the hype and look at the engine driving this move. The headline driving the volume today is the United States Patent and Trademark Office issuing a Notice of Allowance for the EVM301 Series. In the world of biotech, especially early-stage companies like Enveric, intellectual property is the only asset that actually matters. They don't have revenue yet. They have potential locked-in chemical formulas. This patent covers their N-heterocycle substituted tryptamine derivatives. That sounds incredibly dense, so let's translate that into plain English. Enveric is building a library of molecules that mimic the brain-healing properties of psychedelics, specifically psilocybin, but without the hallucinations. This is the holy grail of the mental health sector. Current treatments using psychedelics require a patient to sit in a clinic for 6 to 8 hours under supervision because they are essentially tripping. That model is expensive and hard to scale. If Enveric successfully proves that EVM301 molecules can induce neuroplasticity, helping the brain rewire itself to fight depression or anxiety without the patient seeing colors or losing touch with reality, they turn a niche therapy into a mass-market pharmaceutical pill that you can pick up at a pharmacy. That is the value proposition the market is trying to price in right now at $11.86. But we need to talk about the market mechanics because that is what will determine if you make money or lose your shirt in the next hour. When you look at a stock like Tesla stock or Nvidia stock, you are dealing with billions of shares in deep liquidity. You can enter and exit with millions of dollars without moving the price much. Enveric is the opposite pole. With a post-split float of roughly 500,000 to 600,000 shares, a sudden influx of retail purchase orders from platforms like Schwab Intelligent Portfolios or SoFi Invest for your daily plays creates a bottleneck. If 10,000 people try to buy 100 shares each, that is 1 million shares of demand hitting a supply of 500,000. The price has no choice but to gap up. This is why we are seeing that 100% green candle. It is not just excitement, it is scarcity. This brings us to the Cybrary, which is Enveric's proprietary discovery platform. Most biotech companies find one molecule and spend 10 years testing it. Enveric uses artificial intelligence to generate massive catalogs of potential molecules, over 1,000 candidates so far, and then filters them for the specific traits they want, like high stability and zero hallucinations. The EVM301 patent news today validates this platform. It proves that their AI is not just spitting out random data, data, but generating novel chemical structures that the U.S. government recognizes as unique and patentable. This is a crucial distinction. It transforms the company from a speculative research lab into an IP factory. Even if they don't bring a drug to market themselves, having a fortified patent portfolio makes them a prime acquisition target for big pharma players who are desperate to replace their expiring patent cliffs. Let's pivot to the risks, because ignoring them in a 100% runner is financial suicide. The expectation from the retail crowd, the guys chatting on investment forums and stock twits, is that this will run to $20 or $30 continuously. The reality is that companies with this kind of price action often utilize the liquidity to raise capital. Enveric is a pre-revenue biotech. They burn cash every day to keep the lights on and the trials running. A stock price of $11.86 is a gift to the company's treasury. It would not be unusual, and frankly, it would be prudent management for them to execute a direct offering or tap an at-the-market ATM facility to raise cash while the stock is high. If that happens, you will see a sudden flush in price as new supply hits the market. This is why seasoned traders using interactive brokers trading platforms often watch the level 2 data for large sell walls that might indicate a dilutive event is underway. You have to be faster than the newswire. Contrast this volatility with something stable like an index fund you might hold in a Fidelity wealth management account. In those funds, you are betting on the global economy. With Enveric, you are betting on binary outcomes. Does the FDA say yes or no? Does the patent get approved or rejected? It's high-stakes poker, but today the cards fell in Enveric's favor. The movement is also likely exacerbated by a short squeeze. Before the reverse split, this stock was trading in pennies. Many short sellers likely piled in, expecting the company to go bankrupt or get delisted from the Nasdaq. The reverse split saved the listing, and today's news squeezed the shorts. When a short seller covers, they have to buy stock. In a low-float environment, their panic buying adds fuel to the fire, pushing the price even higher, which forces more shorts to cover. It's a feedback loop of pain for the bears and euphoria for the bulls. Now take a second to pause and analyze the broader sector. The mental health crisis is not going away. Traditional SSRIs, antidepressants, have side effects and don't work for everyone. The medical community is desperate for a new mechanism of action. This is why we see so much interest in next-gen neuroscience. Companies like Compass Pathways or ATI Life Sciences have paved the way, but they mostly focus on the classic psychedelic experience. Enveric is positioning itself as Generation 3.0, all the benefit, none of the trip. If EB003, their lead candidate, continues to show positive data in upcoming preclinical or phase 1 trials, the valuation gap between Enveric and its peers could close rapidly. Currently, even with this 100% jump, Enveric's market cap is relatively small compared to the billions commanded by successful CNS or central nervous system drug developers. This suggests that if the technology works, the ceiling is significantly higher than $11.86. I want you to stop for a second and engage with this idea. The market creates price, but value creates longevity. Do you think the non-hallucinogenic approach is the only way psychedelics will ever be mainstream medicine? Or do you think the trip itself is part of the healing process? Comment below with your take, and while you're at it, comment below how many shares of Enveric you currently hold or if you are watching from the sidelines. It is fascinating to see where the sentiment lies between the purists and the pragmatists. Moving back to the technicals, looking at the volume profile today, most of the transactions are happening in the upper range of the day, between $10.50 and $11.90. This indicates strong acceptance of the new price levels. It is not just a morning spike that collapsed, buyers are stepping up and defending the gains. If the stock can close above the $11.50 mark, it sets up a very bullish daily candle that could attract swing traders for the rest of the week. However, if it fades into the close and finishes near $9, it leaves a long wick on the chart, which is often a signal of exhaustion. If you are self-investing using tools like the Robinhood Cash Management account to facilitate quick transfers, you need to be disciplined with your stop losses. A stock that goes up 100% in a day can drop 30% in 10 minutes without a single headline. Let's dig deeper into the EB373 narrative versus the newer EB003 narrative. For a long time, Enveric was focused on EB370. That is a psilocybin prodrug. It was designed to be better than raw psilocybin, more stable, better absorption, but it was still hallucinogenic. The pivot to EB003 and the EVM301 series represents a strategic shift to capture the broader market. It shows management is listening to what Big Pharma wants. Big Pharma does not want to run clinics with shamans and therapists. They want a pill they can ship to CVS. This strategic pivot is what is being rewarded today. The patent allowance confirms they are building a moat around this new strategy. It is also worth noting the role of algorithmic trading in today's move. High-frequency trading bots scan newswires for keywords like patent, FDA, or allowance. When the news hit, these bots likely triggered instantaneous buy orders, initiating the first leg of the run. Retail traders using apps like SoFi Investing or checking their Fidelity mobile app